Financial disclaimer. The information provided in this stream is for educational and informational purposes only and should not be considered as professional financial or investment advice. We are not licensed financial advisors, and the content presented here is based on our personal opinions and experiences. Investing in stocks and other financial instruments involves risk, including the potential loss of capital. Any investment decisions you make are solely your own responsibility, and you should conduct your own research and consult with a qualified financial professional before making any investment choices. The content we share on this stream may not be accurate, complete, or up to date. Market conditions and financial regulations can change rapidly, and we cannot guarantee the accuracy or reliability of the information presented. We do not endorse or promote any specific stocks, companies, or investment strategies. Any actions you take based on the content of this stream are at your own risk, and we will not be held liable for any losses or damages that may occur as a result. Always remember that past performance is not indicative of future results, and no investment is guaranteed to be profitable. Make informed decisions and consider your risk tolerance before investing any funds. By accessing and using this stream, you acknowledge and agree that we are not responsible for any investment decisions you make as a result of the content presented. You are encouraged to seek advice from qualified financial professionals for personalized guidance. Please invest responsibly and only with money you can afford to lose.
Hey man, just found the next guaranteed multi-bagger.
Hey man, you found another one? What is it this time?
Come check this out.
Okay, next please. How can I help you, young man?
We want to go all in on YRC. We love a reverse split bonanza and, well, we like to drink.
Well, that's fantastic. A really smart decision, young man. We can put that check and it's gone.
Nice.
Hey, what's up, Johnny?
Yeah, I'm doing good this week. Haven't done so much though.
Yeah, it's like that. Welcome to Laughing Stock, everybody. It's a Sunday. It's been cold and rainy here, actually.
Oh, really?
Had some nice days, and of course the weekend. Every time it's the weekend, it rains and it's cold.
Yeah.
Oh, that's New York.
I think we have a little bit of similar weather because, well, actually, the last days now, you know, there has been a slow week swing trading wise when we start the stream talking about the weather.
Yeah, right. Although to be honest, I think, what was it, 3 days up in a row? I mean, or was it 4 days?
Yeah. And we wrote in the description, right? Like things have maybe started to slow down a bit, but it's still so tricky to try to predict anything. I feel like as soon as anyone opens their mouth a little bit, things can change in a matter of seconds. I have to say though, I'm very surprised. Our countries are so good friends now, it seems like.
I know, right? No, I mean, to be honest, I've always thought that it would make sense to turn Social Security into some kind of thing more similar to how your guys' sovereign wealth fund is. That it just makes more sense. I don't know why we don't invest the money. Why are we putting it in a fund that doesn't go anywhere and just gets eaten alive? Like the whole premise of it just being paid for by the next generation. Yeah, if we had continual growth, but that's like literally impossible. So it's a poor plan. So I don't know. They have to do something because the other thing too is Social Security's it's a huge chunk of our budget.
Yeah.
So
well, they were interested to learn how we had set up that fund, and I was a bit surprised of how our former prime minister used to be the boss or the head of NATO, and apparently he had a very good relationship with Trump, which we haven't probably understood that here, how, because Trump seemed to love the guy. But he's a very likable guy though, and very respected and good at what he's doing, so that comes first. People will respect you then.
Yeah, no, and I think the success of Norway and I mean, you can say, you guys we're fortunate with your natural resources, but there's a lot of countries with natural resources that don't pull it off like Norway did. So there's obviously a lot more to it than just saying that you guys were fortunate with, you know, the oil that you guys were able to like find and use. There, you
Yeah.
know, I think what you go ahead and do with that, I think you guys were really smart to capitalize on it and make sure that that just didn't go to all profit for the very biggest companies. And, you know, that you guys have, you know, kind of spread that wealth amongst the people there. I think that's, if there's any form of socialism that seems to make economic sense, providing some kind of welfare in terms of the, you know, overall prosperity, to use that in hindsight is a smart move.
Yeah.
You know, that way.
And then you know, we have our issues too, also tied up to that fund, but there's always like discussions on how much we should use of it and spend. Like you know, in my real job, we don't have so much money in some of the systems like hospitals, schools, you know, like homes for all people, stuff like that. And you know, we could always use more money, and it's a bit frustrating. Then sometimes there's a lot of discussions on, you know, what to prioritize, and maybe we should spend a little bit more of it. But that fund is just doing amazing, and is just keep on growing, you know. And they own a big portion of um, I don't have the stats, but it's a very large fund.
Yeah. No, I'm.
Yeah.
It's up there with some of the largest.
Yeah.
But yeah, I just think that, you know, any model that shows success should be appreciated for it. And, you know, if you, like, for instance, like Social Security in my mind has a ton of holes in it. And, you know, I think we could learn a lot from the way other countries do things. I think Singapore is a good example. And I know these are typically considered kind of, you know, more socialist in terms of the way that they're structured, but I also think it's just as intelligent. If like that's the way you would run like a family, why wouldn't you try and run a country like that? Like, you know, like imagine for instance if we took Buffett and we're like, hey, let's have you run a fund that controls like the government's, like, you know, background money. You know, we would do pretty well, I bet.
Yeah, and I have to say, like, I have posted in the Discord channel and also talked about it on the stream, like our oil fund manager, which is not an easy job to get, you know. He has, or they have a YouTube channel with a lot of great interviews with, you know, the CEOs of large companies. Sam Altman has been there. There was a lot of news about Elon Musk. He was invited to their annual dinner, and then the oil fund voted against him getting that benefit package, and then he withdrew his participation to that dinner, so he didn't come anyways. But you know, Bill Gates has been on the channel. There is a really valuable YouTube channel, I think, that I have been watching a lot of the episodes on, and it's the fund manager who has the conversation, so it's good conversations too, you know.
Yeah, no, that makes sense to me.
Yeah.
Yeah, so overall, I mean, I just got the dashboard up here. Yeah, there's some stuff moving around. Tesla, speaking of Elon, has started to climb back up.
Yeah. Just
still doing
terrible
well.
numbers, but the news that he will actually run the company now sent the stock price up.
Yeah, but I think that's I think that's a huge problem, especially because it's public. The fact that Elon's juggling so many different things right now, I think if you're a Tesla investor, you want him back at the helm. You know, regardless of what you think of the guy, because I know he's a pretty divisive character these days, but he obviously is successful in business. You know, that's one thing that no matter what you can say about him, he's successful in that. And
if you pull up the Tesla chart, then you can see the price. Everyone knows this probably, but the price has taken out a big hit, you know, since he started with his politics, really. So the stock being up a little bit now, it's you know, if you bought at the top there, you're still down a big percentage.
yeah, and I will say it did touch the 200-day moving average here, and then it did pull back a little bit, but still, here, I'll just zoom in a smidge on this.
Seems like a good bottom around 216, right? 216.
Yeah, I mean, there's all kinds of different like support levels you could find in this range here, but
Yeah.
um, I just wanted to zoom back a little bit, like a 3-year weekly. So I mean, it's still, you know, for the past few years, it's kind of been trading in this range. To be honest, I mean, it's been, you know, I would argue this isn't even a bad spot right here.
No, true, and maybe the stock needed a little bit of a pullback, you know, because people have always tried to do stuff with Tesla, short it or go long it. It's a very tricky stock to predict because it kind of lives its own life, a bit like Bitcoin, right?
Yeah, when, you know, I mean, Tesla's known as kind of the original meme stock, you know. I know GameStop probably
Yeah.
gets that more credit for it, but to be honest, Tesla, you know, was the one that was really kind of wild, you know, before GameStop.
Yeah.
But we'll see what it does from here. I think I'm not sure if it will be extended because I think Elon has 120 days in the administration to be like a special worker or whatever it's called. So
Yeah.
I think once that's up, he'll be done with Doge essentially, and then
Yeah.
I don't know if someone else like takes that to the helm or how that or if it just gets dismantled or what happens with it. But either way, then he'll be back to just working on the different
Yeah.
companies, you know, this SpaceX, Starlink, those kind of things.
I read that, and I think they communicated this already in February, that this was the plan all along, and that he was going to step back around the time we are in now. And I
Yeah.
read somewhere that Dodge is going to continue with the other people, but I didn't dive into it. But I read a little bit about that they're going to continue.
Right.
But it's going to be different, of course, without him. He has made a big fuss about that, and I think the intentions were very good. And I'm not sure you have this overview better than me, Dane, but I just read they haven't been as successful as they thought they were going to be.
Well, I think there's hesitancy, obviously, to even. I think in general there's hesitancy to spend a lot on anything right now. Just with interest rates being a little bit higher, I think consumer spending's kind of pulled back, and there's so much that's kind of unknown of going forward. Another big thing I see is, you know, Trump's administration compared to Biden's administration is definitely less pro clean energy, and you know, where the Biden administration was willing to throw a lot more money into EVs and to make that push towards electric. That's definitely slowed down under Trump. So I think there's a couple different factors that come into it. But to be honest, you know, I don't really worry about Tesla. It's not something I'm going to be buying. So not unless it was to really pull back here. Which if it comes out with bad numbers and it does that well, that makes me think that you know, it's probably not going to pull back to where I would be
Kind
interested.
of wants to go higher again, you know.
Yeah, people like to pour into that one. So
Yeah.
we'll see. I pulled up my market strength thing. I did miss Thursday, so my data missed a day. But I mean, as you can see, you know, if you look at a lot of these long range ones, like we are slowly climbing towards stuff, getting towards highs. If you look at the 52-week highs here, we're still kind of low on the overall numbers. Breakouts have not been working great at all. I mean, if you look at these numbers, whoops, I didn't mean to do that. If you look at these numbers in here, it's just been ugly. Your percentage of hitting things is low. There's not a ton of breakouts. And just my overall market strength is, you know, it's ranged from 5 to 10, which, like, you know, I had a good day finally back here on 4.9, which was rated at 60. And I imagine in a bull market, the number's got to be closer to almost 100, I bet. So us bouncing still around down here in the teens and whatnot, and 20s, is very, very low. So just to show you in terms of the breakout side of strategy, not very successful, not really a great thing to be working on right now.
Yeah, I can't show you the sheet today, but in my sheet, which I showed on the last stream, I think it was, I have a few, like it shows a little bit of a similar picture. A few things are up 1 point, up to 1, but keep in mind that the top score is 5, you know, and 1 is still very low. And actually not, I'm rounding these numbers up, so not one single group has a combined score of 1. They are all like 0 point something. I think the highest is 0.89. So we're still very, very low. And this changed daily, you know, I update it daily. So if they have a bad day on tomorrow again, they will go back to 0 again. So if this is the start of a turnaround, it's very early still. And in terms of swing trading, I think I said to you, Dane, before the stream that we need to be a bit more patient, even if things turns, I think.
Yeah, no, for sure. And I'm just looking through the insiders because I didn't get a chance to update these. And I mean, there's some of the names I've looked at before here. I like, you know, Genwell or Geldwin. That's an interesting one. It's a home building one, and that whole market's gotten hit pretty hard.
Yeah. I see Mastercraft is there.
Yeah, there was another person buying into Mastercraft. Did you see that?
No, it's the
Another
Forager
fund.
fund. Forager fund. 10% owner. Interesting. I missed that this week. But wasn't that the... Is this the Australian firm?
I'm
No,
not 100%
Birmingham.
sure. Just pull it up so people can see what we're saying.
Yeah, they are from Birmingham, so it's a United States fund.
But they must have been acquiring for quite some time because all of a sudden now it's saying they're 10%. So, and obviously
Yeah,
they have quite a bit of shares here. They owned, you know, 1.7 million. So
I have seen them on Whale Wisdom. They have a 10% stake now. And they have been buying since 2021, it says. It's actually their second largest holding.
how many holdings do they have?
They have 14.
Oh, okay. So yeah, they're actually
They have
value fund.
a big portion into this. Okay, interesting. They purchased at 15 and 16 bucks. I think my average is 18, so I'm a bit higher. And Coliseum has not bought any more either. Mastercraft, if you pull up their chart, then it's you know, it's not looking like a good chart right now.
Yeah, no, I just had it. Yeah, it's definitely trading lower right now.
Yeah. But maybe on the way up. They had that bounce on earnings, and they have earnings in 10 days. If you look at the history of that company, it's the history, at least, is like they keep beating earnings estimates. So I'm just hoping that eventually, you know, it's impossible for the price to be down here.
Are you still holding them?
Yeah, I have them still.
Gotcha. Yeah, some of the other, I mean, a lot of biotech, finance, you know, some small caps in here that I wouldn't really look at, but still not a ton of insider buying going on the past few bit. There is some interesting stuff in here.
Yeah. Another one in GTE as well, I see.
Yeah, I just had pulled them up and was looking at that chart.
Yeah. It's the same firm.
But I did pull in, man, Texas Pacific has just been murdering it for such a big, expensive stock. I've been following these guys for forever now. contemplated in my one portfolio taking them, and I thought it was expensive back, somewhere in here, 600, some dollars, and now I look back and I'm like, ugh.
Yeah.
You have to not be so afraid when it's a higher price stock sometimes.
And that chart looks a bit good too.
Yeah, just a bit. Obviously, a longer hold. This is, this would be more evaluated. I just typically don't look at stuff that's, at this size.
That would be a bit of a different play.
But yeah, in the Discord, we had a few people throw some tickers. I think it was Nathan's Famous and Alpha and Sigma. Was that what it was? Semiconductor. So we'll go over those. I pulled in just stuff from just the daily movers and whatnot. There's nothing in the portfolio right now. Still just blank. Like I said, I didn't do anything. I didn't trade or do anything this week. Still kind of watching things. Doing a little reading here and there. But like I said, just this macro environment's tough. So, I'm not trying to time like a bottom perfectly or anything like this. And it sounds like to me, and I kind of put this in the start of the or the comments, but like I think the tariffs are kind of at like kind of the peak of what they were. I know a lot of stuff's been delayed. And the idea is to get all the countries to kind of come negotiate with the U.S. on where they want to stand things going forward. I think the whole the China one, it's kind of detrimental to both countries. I think both China and the United States has a lot to lose by really having too large of a trading deficit between each other, and not even a deficit, but just the lack of trade essentially going forward. And I know things will shift to other countries, and you could call that a win, I guess, for democracy. There's opponents of communism and what they, the Chinese government's not always been, obviously they don't play fair, in terms of IPs. You listen to all the CEOs, they all talk about that, how, intellectual property gets stolen and they're able to come in and kind of swoop the markets and do all kinds of things that, people don't approve of. So, if we want to limit trade with a country like that and, shift factories and stuff outside of there, like I just saw Apple shifting their factories to India, which is, that's a huge loss for China. And if you start to see other companies start to take suit on that, where they're going to transfer outside of China, it's extremely important for the Chinese growth story to continue. And I think if they start to lose big businesses like that, where they just don't want to take the risk on of, being in China and start to switch to other, countries that are developing, that could be a real catalyst to get China to make sure that they work with the U.S. to come up with some kind of trade agreements going forward. And like I still think it would be beneficial to stay as a trading partner with China. But I see why, possibly pushing for strategic reasons to other countries also would be really important. So I don't know. We'll see going forward on where that all lands. And, obviously I'm not an expert on any of that stuff. That's just me kind of spitballing ideas. But, yeah, and then if we go into the dash, I just, like I said, I just pulled in a bunch of tickers, just different stuff, trying to find stuff with some cash flow. That's usually kind of what I'm looking at to see if anything looks interesting at these points.
Then before we start to do this, I was supposed to mention at the beginning of the stream, we saw this week, right, that there's going to be a new Market Wizard book coming up in approximately 1 year, and it's confirmed now that Kulamagi is in that one, so that's going to be exciting. I'm looking forward to read that book. I think those books are amazing and very motivational to read all these stories. And we have been fans of Kulamagi for some time now and watch his streams, and a bit like Roaring Kitty, right? So that will be very interesting. And I saw some commentary about them had also considered to reach out to Roaring Kitty to put him in the book, but they stepped away from that idea. But they haven't. They said on Twitter that they had 2 spots left for the book. So hopefully, I hope that they put Roaring Kitty in it
Yeah,
as
they
well.
should. I
Yeah,
mean, that's
if he wants, of course. But that's going to be such a good book to read. I think I'm looking forward to it a lot.
yeah. I will say, Q seems to be pretty open about his stuff because I remember like when Minervini was interviewed in it, he didn't really give a lot. Minervini's actual books themselves are much more detailed in terms of his strategy and kind of his approach and stuff like that. And Christian's been on his videos when he streams and stuff. He's pretty open. I mean, he'll show you exactly what he's doing, what he's watching. He might not explain the ins and outs of things as well as I know, because I know that's one thing that he gets a lot of criticism for. Like if you read through like his Discord and stuff like that, people are quick to kind of say like, he doesn't really tell you. He just kind of gives you like generalizations constantly, which I know frustrates some people. But to be honest, there's a big part of it's nuance too, and it's not like there's like perfect case studies. So to just say like, you have to wait for this or this has to be good enough, like you could, it's just tough to actually explain that in detail. You and I had talked about, how much of our strategy do we want to devolve to people? And the more I do it, the less I see it matters because to be honest, when I go to take a position and stuff, it kind of just becomes like in the moment and I decide like, all right, this is the one I want to do. It meets enough criteria and it's not like it has to meet A, B, C, D, E. It's got to just meet a couple of those and be in the right kind of environment for me to take trades or to invest in something.
Yeah.
So
and I think a good point about Kulamagi as well is like he like a lot of people, he blew up some accounts before he saw any success, right? And one of the big lessons that I remember he speaking about was that he followed a lot of the wrong people and he tried this course and nothing worked, and he felt like he was being scammed a bit. So one thing that is very valuable, even if you think he's generalizing a lot of the things that he is speaking about on the streams, is he also have a website full of tips about which books you should read. Maybe a lot you will understand if you go through everything you read, which people you can follow on Twitter. He gives you a glimpse into his world that has been successful for him, so
Right.
so if you just follow that, you're going to be placed in a area where you have already filtered out some of the BS that you can be a victim of if you have to figure it out on your own.
yeah, which is to my point being on Q is I hope there's a good amount of detail in his section, and it sounds like I know he interviews really well. He's done interviews with all kinds of different people, so I think it'll be a good read no matter what. And there's always, I'm sure there's gonna be people in there that I'm not even expecting that are just as interesting. So that'll definitely be a book I look forward to on day one. And then and with RK, who knows? It would be cool if he got put in there, but how much would he actually, give away in terms of his strategy? Because obviously there's points where he decides that he's going to take on, pretty heavy option positions. And, there's a lot of risk doing that. I mean, you think about it, even in his shoes where he had a lot of money, I guess, it all depends. The one thing I keep going back to is if you did the math, what was it? Was it a 5% position or something, or an 8% position? Yeah. His position, I think, was 5% when you looked at his thing. Which, in the grand scheme of things, I mean, that's really not a ton of risk for the upside potential he had with GameStop. So, I guess it just depends on how long you're willing to wait. And if one of those things work out, an option play that's 2 years out with a 5% position, if that works out, I mean, what is the return on that? Typically if something doubles, what's the option do? I'm not sure what the equivalent is, but obviously it's going to do really well if the underlying stock does well.
Yeah.
And,
I saw they got a question and the guy was like, say, he thought they should try again to add him into the book, because there was a lot of things that he could potentially talk about that is not on YouTube already. So they said, I think they will consider it again, but yeah,
Yeah,
let's
no,
see.
I know. What is it, Jack? Is that his name that rates the books?
Yeah, Jack Schwager, isn't it?
Yeah, I know he's watching this. So Jack, yeah, put him back in the book, all right?
Yeah, seriously,
But
we need more of RK.
yeah, I mean, I would say, I've read quite a bit on options, and I have played with options. Like I trust me, I know how to do them. I just don't like the time risk that gets involved with those. But
Yeah.
with a deep value investor, a lot of these companies, just because they're so small, just the way momentum works, they do tend to cycle quite a bit over the course of 2 years. Now, don't get me wrong, there's ones that are kind of in the dumps, but if you have confidence in a kind of a turnaround story or something like that, taking a 5% position in options or something like that, that could be a huge return. And I don't expect it to be thousands of percent like Roaring Kitty got on some of those, but it could be easily like a couple bagger, 5-bagger. Roaring Kitty talks about multi-baggers and getting 10-baggers and 100-baggers and those kind of things. And with options, I mean, that's where you could really take off. I mean, for instance, value on here with NUTX, I mean, does extremely well with those, with the stock price there. But if you had taken options for a year out, I mean, that would have been a 100-bagger, which is nuts to think about, and that's where you could turn money into some serious capital in a short amount of time. Now, obviously, you put up the full amount, and it's a risk that you're willing to take on. But if you have an account, and let's say you had like 50 grand in it, and you put 1,000 in, so it's was that a 2% position, and you hit one of those, I mean, yeah, you put $1,000 up there, you could totally lose the 1,000 or lose most of it, but if you're able to find something that's trading with pretty low volume and the options make sense price wise, you could easily see massive returns on some of those. Now, there's risk with options. I'm not saying to buy option. I'm just saying I see the intelligence in that strategy. And my bigger question and thought on all this is, how much does RK actually utilize that strategy? How much was he using options to build up what he had? Because there's a lot of companies that you and I look at, and I talked about, if I went back to deep value, I'd probably spread it across more plays and do smaller positions, 0.5%, 1%, up to 2%, that kind of thing. And if you are doing that strategy, and you let's say you strictly did that with almost all options, I mean, you could really do well. And in the rare case you ran into a bear market, you could definitely get eaten alive, depending on your time frame. So if you could do out of the money options and do like 2 years out on a lot of those things, I think that's where you could really see huge potential.
Yeah. And also, even like you touch upon it here, like what did he do when he came back to do that one stream? Also, I'm sure he had some kind of play going on then, was that also options? Because that stock price was going pretty crazy then too.
Well, didn't he have options? I mean, that's why he became a billionaire overnight for a second. At one point he was a billionaire if he was able to cash out. Now I know you can't just cash out on that, but I mean that's pretty wild stuff. And someone who goes from an initial account size, under 100,000 and can put that up to $1 billion. I mean, you are in an elite level of very few people who have returned something like that, especially in the time frame. I mean, there's people who do that over the course of an entire lifetime, of trading or investing. But to do it in a few years is incredible.
Yeah. Well deserved to be in the Market Wizard book, together with Kulamagi.
Yeah, kind of a random tangent to go on, but but yeah, I am excited that the book's coming out, and it's it was one of those things too that I was surprised that Q hadn't been in one of the books yet, because I know his last
Yeah,
one he had written. It came out. I remember Q was actually talking about it on one of his things. He was
yeah,
excited about it. So
I remember that. And I thought maybe he, because he talked a little bit like you could. I thought that he was going to be in it by the way he were speaking about it, but he wasn't.
yeah, well, can't say that anymore.
No.
You said he said it'll be out in like a year.
Yeah, I think they plan to release it in the summer of 2026.
Yeah, then interesting enough too. You and I were talking about the comments, and someone had posted that he's been in the B market a lot,
Yeah.
which apparently may be the Swedish small cap. Which I don't know if
Um,
that's right. I was
no,
talking to AI to figure out what they meant by that.
If
But
you still, maybe he meant like he, I don't know, because on Kulamagi's Twitter, he's still saying like he trades in the US stocks only or something like that.
yeah, so that that could have been just AI guessing wrong too. So,
Yeah,
but
I was
interesting
just,
nonetheless.
yeah, maybe it's like the B, like he is taking it a bit slow or something like that.
Yeah, I'm not sure,
Yeah,
but either way,
all right.
we'll keep going on here. Like I said, I just pulled in some tickers here. I got Array up, which I've looked at Array a bunch of times. It's a solar company, and solar's been hit pretty hard. Almost kind of the exact same reasons you and I were just talking about Tesla.
Yeah,
There's just not. It's not super profitable on its own, and then on top of it, without the government, kind of throwing cash its way. One thing going forward too is I know whether how successful Doge is in actually cutting a lot of these government programs and stuff like that. The fact that I think in general you see Americans want our government to stop spending kind of so freely across the board on just anything they want. Some of these like corporates that have benefited from that government spending, I think those are tough areas to be in right now, because I have a hard time seeing a lot of that spending coming back in. I think people are going to be pretty critical of where money's spent going forward. And I know Congress has the ability to just kind of spend whatever they want. So I don't know, maybe once Trump's out or Doge is done, that spending just goes back to full chaos, and we'll just keep printing money and not worry about it. But just look at a company like this. The cash flows were $1.50 a year ago, and $1 so far in the trailing 12 months. But EBITDA, EPS, all of it's just negative now. Huge loss in revenue. Huge loss. This is kind of crazy numbers to see that much of a drop off there.
And the chart reflects this, of course. I pulled up the chart because in my theme sheet, solar has actually made it up to 1 point, and it's much thanks to one stock, which is Canadian Solar. But that one has a very similar chart to ARRY.
Gotcha.
So they have been just declining for a long time now, and it's really trading pretty low,
Yeah, and it looks like they have a decent amount of cash on. Short term isn't anything crazy, but they do have a good amount of debt. They're levered about 2 to 1, which is probably pretty safe. But once again, we're also in a higher interest rate environment. If you're not going to be generating a ton of cash, it's kind of concerning.
Yeah, but a bigger picture thing with these stocks also is like, I guess you talked a little bit about it, but going into the future, do you think these will be profitable companies?
It's hard to say. I think the technology is constantly changing. As solar panels improve, as battery technology improves, it makes a lot of this more feasible.
Yeah.
I find it's kind of crazy that you've seen like countries like, for instance, like Germany. Germany, basically stopped all their nuclear power plants, and now they're buying power from, they're buying essentially gas and oil from either Russia. China continues to just be pumping out these coal factories. So for everything we do to seem to try and help with climate change and the environment and all that, there's someone else doing the exact opposite, and they seem to be the ones benefiting from it, monetarily. So I just wonder the long-term feasibility of these. In the meantime, until we can get to a point where, like you said, these are really cash flow positive, which, I mean, it does generate cash, so that's good. But at the same time too, and I'm talking from operations is how I look at it. But will these survive to that point? I don't know.
No, because that revenue decline, it's not just to snap your fingers and you get all that revenue back. That's a pretty heavy decline on. And speaking of the environment we are in now, that's going to be a bit tough.
And they are still diluting. That's the other thing too. Is they're diluting, and was debt going up? I didn't even check. It's down a little bit, but it's more just kind of what they're paying off on it. But it's not like they're trying to pay it down by any means.
Yeah.
Which, I mean, if they're in a low interest rate right now, maybe it's smarter to hold on that cash just to make sure that they can, keep the system that they're in right now. I don't know when their stuff's due, but whoops.
I think the sector has got a little bit of an upgrade in terms of, from analysts and stuff like that lately. That's the only news I can find, but there's some Seeking Alpha articles on this one that are positive to the stock.
Gotcha.
But saying that though, since the last one who had a buy rating, it's down 30%.
Yeah, and they're good. They're good till 2027, which they even can pay for 2027. 2028 is when the rest of it's due, and then they are in a tough position. So they have plenty of time. They do have a revolver too that they don't have any money out in. So actually, they're relatively safe.
Yeah.
But that makes me think dilution or something's going to continue.
Yeah. Seems like they have made some bad deals also in some Brazil deals.
This is going like extremely slow.
Yeah.
It says their main competitor is NXT, and they said they're not. The markets aren't as impressed.
Yeah, that one.
Yeah, these guys are kind of talking about the same thing, saying it's all about how much money it's going to be pulled together to make sure that the.
I think it's going to be tough for these companies. And like, have they? If you go back to the fundamentals, like, which was their best year?
I guess last year. I mean, you can go back to 2019, but the data gets kind of wonky on that first year, so I don't always trust that one. But cash flow last year was best. They were EPS positive, everything. So, but everything was kind of up last year. You know what I mean? So
yeah, it was then 23. So their share price at that point was $26 almost, like around between 17 and 26.
Yeah. I think at this point I don't see enough I'm not confident enough that I would invest in this.
I agree with that. And there was some. What is the price now again? 5. There
Yeah,
has
it's
been some
502.
insider. There was some insider purchases in November and December, which was around $5 to $7, but they are not very big.
Yeah, and the other thing too is, I mean, this is it's had these little runs like, you know, like you've seen in the past week here where, you know, it kind of creeps up, but then it always breaks down. I mean,
Yeah,
it's been breaking down all the way as far back, you know, the year I got.
yeah,
If I look at the weekly, I mean, it's been since mid last year, you know, that it's just been tanking. So even one strong week here gives me pretty strong hesitation to think that this is going to rally here.
yeah. And if you look what it did on the last earnings report, look at the volume, selling volume.
True.
There's a new earnings report coming in 9 days. So right now I'm definitely staying away from, I think, this entire sector, to be honest.
Yeah, I'm gonna keep moving on here.
Yeah.
All right. Next, I have Agro, or AGRO. It's a holding company. It's involved in a range of businesses, including farming crops, other agricultural products, dairy operations, blah, blah, blah. It has 3 main lines of business: farming, land transformation, and then it looks like it's sugar, ethanol, and energy. So it must be all from like sugarcane.
Yeah.
It's various manufacturing, blah, blah, blah. So they also are involved in activities consisting of acquisition of farmland or businesses with underdeveloped or underutilized agricultural land. So kind of like farming, obviously on the larger scale, and the products themselves that come from those. It looks like it's pretty solid in terms of pays a dividend. It's trading at $9 a share. They've been paying down shares. Revenue's up. Cash flow looks pretty good. This is a pretty good looking company right now.
Yeah.
In terms of balance sheet, it carries quite a bit of debt. But I wouldn't say it's at risk. It looks like it's always kind of held this debt, and it's actually been paying it down too, which means they've been putting their cash to good use here.
Sorry, it took me a while to pull them up. I have them here now in my sheet.
And what was the news from yesterday? Because it took a nosedive yesterday or on Friday.
-15. Yeah. Let me check here. There was some news 2 days ago, on pace for largest. Hold on. It's some downgrades, it seems like. Announces the filing of its Form 20F.
Sorry.
20F, what is 20F then? Oh, they are from Luxembourg.
I was just wondering where they were from. Yeah, so it just looks like a downgrade, you know, and that's more the price target. It's down to like $11 from 12, so not a ton, but looks like there's uncertainty regarding the long-term strategy of Tether Investments as the controlling shareholder of the company. So Tether must own a huge part of these guys, which said they had a tender. Tether will acquire almost 50 million shares for $12.41, reaching a 70% stake. Wow. So there's only 30% of float, which is, you know, can lead to pretty big adjustments in these things. Sorry, I just gotta close some of these windows. I got so many things open. I feel like it's slowing it down. I mean, this is one that's really kind of bounced around. But the other thing too is like, just looking at the chart really quick, I'm probably gonna pass on this just because the range here is not really all that exciting.
Yeah.
We can kind of conclude that this is probably worth about $10, $11, and it's probably not going to move too crazy from there. I don't think there's anything that's going to happen with the business that's going to adjust it much more than that. You agree?
I think it's one of the most flat charts I've ever seen in from the from the history.
Yeah, and I mean it's had a few different ranges it's traded in, but pretty consistently now here. And besides COVID, where it took a nosedive.
Yeah.
But yeah, I mean, even if you go back into the 16 and 17, same range. I mean,
yeah, between 8 and 12,
I'm gonna keep going.
Yeah.
All right. Next, I have Ardog, or however you say that, metal packaging, Luxembourg. What's going on with Luxembourg?
Another one.
Maybe something to note, the fact that something's going on in Luxembourg. Wait, hold on. What's the chart look like?
Same.
They took their money out of Agro and they put it in Ardog metal packaging. That's what happened. Very obvious here. Wow, look at that chart.
Yeah, I was about to say, like in the beginning, they see, if you look at their IPO.
How long ago the IPO? Oh, no longer. Okay.
Yeah. It's just straight down, which happens a lot, right?
Yeah, I mean things come out for way too expensive.
Yeah.
But yeah, someone bought this at $9 perfectly. I always think that's funny that someone was like, "All right, I'm taking it right now." But all right. Well, so is there news on this one?
Earnings report,
And
which
was good.
beats the estimates, and then you have some upgrades.
I will say there was a 6% drop in after hours.
They also say, though, that Ardagh shared gain after can maker says no tariff impact. So it seems like they are dodging the tariffs a bit then.
Gotcha. Though it still says net loss, it's narrowed. So once again, not necessarily like exciting news.
Yeah.
What do I have? I got simple free cash flow at 76 cents. It's pretty solid. Five billion in revenue, so pretty big.
Yeah, that's also a good increase from the previous year.
Very levered.
Yeah.
Anyways, though, it supplies infinitely recyclable metal beverage cans to brand owners. So it's for beer, soft drinks, so stuff that whatever drinks come in. Operates approximately 23 production facilities in the Americas and Europe. The company is also a supplier of metal beverages, can package solutions capable of supplying multinational, national, and regional beverage products. I'm surprised I have not looked at these guys before. So these are the guys who make all the cans for everybody?
Yeah, it seems like it is, but I've also never heard of them, so bit weird.
Interesting, yeah, that I've never heard. I mean, the one thing I like about this business already is that's a business that's not going anywhere. We're going to have canned drinks,
Yeah.
I know some things like glass has become more popular again in the United States, but and I know glass is pretty popular in Europe still, right?
Well, yeah, a bit. It's not like it's actually disappearing more and more, I think.
Yeah.
But on restaurants and stuff, you usually get glass bottles.
Yeah, I was gonna say, most of the alcoholic beverages here, I mean, the cans are still very popular, but glass is too. Glass keeps its spot there.
Yeah.
But I have seen some things like certain like sodas and stuff like that. It seems to be a little bit more popular now to have glass once again. And I think one thing that you see in the States here is just because of the fact that we're not the most healthy nation in the world. you know, people when if they're gonna drink soda and stuff like that, it's almost more like of a premium product where you're drinking it less. So where back in the 90s and stuff where people were just pounding sodas down, people are doing that. I think less. So someone will get like a glass or something like that as opposed to always just going for volume.
Yeah.
But I want to go back to the chart.
But speaking
here.
of volume, they had there's some good volume coming into that stock now, though.
Yeah, I mean, I would like to see this trade into a range now. This is possible breakout in terms of this isn't in me. I don't look at this like as a investment. Maybe if you had figured it out back here, like I would argue back when it was down to like $2.
Yeah.
That's pretty cheap, to be honest.
Yeah, $2 on this one seems pretty good.
Yeah, so if I would have seen this back then, I would have maybe considered a long-term hold. But now I would look at this more of in terms of seeing if it could break out.
Yeah.
So if this finds a range in here and is able to push up to this $4 range, that would interest me. Especially it like you said, it's coming in on pretty solid volume, 10 million, and then almost 5 million on Friday.
Yeah. And they do pay a dividend to this company, right? The market cap is pretty big. What is it? 2.2 billion.
Yes, 2.2 billion, and I mean it's a 16-cent dividend, which actually was, or no, hold on, 40-cent dividend. It was pretty high. Even when this was $2, the dividend was 40 cents.
Yeah.
I mean that's really high dividend. So darn, I wish I would have seen this before.
Yeah.
Wish I would have saw this on Wednesday.
Yeah, I know. It's just a week ago.
But either way, I'm gonna send this to the database. Dividend. It's got a good. Market niche, big, but
And there's a Seeking Alpha article
I did.
from yesterday. He's saying I prefer debt reduction over dividends given the 3.4 billion net debt, but remain invested as the stock trades at less than 8 times sustaining free cash flow. They did have some debt, right? So
Yeah, they had a lot
I can
of
understand that point. Yeah.
Which fair point, but maybe that dividend's at risk, but
Yeah.
that's why I said like at this point, not so excited about it as an investment, but possible trade.
Yeah.
All right.
Yeah, because the chart looks a bit good too.
Yeah. All right. Next, I have Netgear, which I know them as the internet. They like the router. They build routers and modems, that kind of thing.
Okay.
A lot of wireless, essentially, stuff for homes, businesses. They focus on consumers and provide high performance, dependable, and easy to use premium Wi-Fi networking solutions. Blah blah. Smart devices such as Mural Digital Display. I don't know that one. Subscription services that provide consumers a range of value-added services. Blah blah blah. It's all that, and they're primarily all over the world, I guess. America, Europe, Middle East, Africa, Asia. Why don't just say everywhere?
Yeah.
All right. Revenues have been crashing, which is interesting. This looks kind of ugly. I wonder why.
They have a earnings report in 3 days too.
It looks like they have pretty good cash. I mean, they had really good cash flow in the trailing 12 months. They only have 30 million shares outstanding, which is kind of surprising. Market value is 700 million. They're well capitalized and they don't have any debt. So nice clean balance sheet. Had a strong day on Friday, really strong.
Yeah.
Broke out of a small range that had consolidated here pretty good and on pretty good like accumulation. Not in terms of the actual volume, but just multiple days of it.
If you look at the you have the chart there, right? I guess you can argue from August 22 to today, this is forming a huge cup and handle, and then you come earnings now. So if you get a breakout here, this is even interesting for a swing trade. I think I added it to my watch list.
Yeah, I kind of like this here, and so it's trading at 24. It's worth $8 in cash, straight up. I mean, if it, it had some down years the past 2 years, and it looks like the trailing 12 months has improved quite drastically. So even if it can just stay positive here, what is this cash flow? Did they sell anything or?
Let me check here.
I just want to see if someone's talking about this because this one looks pretty good. Looks like in general on Seeking Alpha, everyone's pretty bullish on it.
Yeah.
It said, looks like the market finally caught the possibility that TP-Link's routers, which is 65% of the market share, could get an outright ban to import into the US. That would be massive for Netgear.
That a competitor is gonna get banned, is that what you said?
Yeah, and that's from the 25th, so we'll see. The other comments are from earlier in February.
Yeah.
And, they're talking about the money they had, but they're saying that they already spent it. I don't know what. I didn't read the.
Let me check the press release here.
Yeah, it said apparently that they spent it. Netgear projects double-digit NFB growth in 2025 amid restructuring and software investments. So it looks like they're working on their business-to-business side. Program emphasized the company's operational improvements, including eliminating excess channel inventory and reducing DSOs to the lowest level in over 7 years. They've dropped finished goods by approximately 86 million year to year. A significant settlement with TP-Link added over 100 million in cash to the company's balance sheet. Netgear repurchased 33 million in stock at the end of the year and ended Q4 with 409 million in cash and equivalents.
They also came up in January with a new improved product, so that is a bit exciting for them, I guess. But I can't find any purchases.
Yeah, I'm not sure. Supply constraints, management is addressing these issues. Regulatory scrutiny of TP-Link poses both risks and opportunities. Yeah, I'm not seeing what that guy's saying that they burnt all their money on.
Yeah, I agree.
If anyone's in here,
But
I haven't even been checking. Is there any comments? No.
let me check on.
Um, I mean, we'll probably have to wait for their earnings report here. But like you
Yeah,
said,
that's
I mean,
I
if this
was
can,
about to say. Like, if they come with a good earnings report, this is highly interesting in terms of both swing trading and deep value, I think. I
yeah, it
can't
just looks like
see
they're
any.
doing better right now. I mean, I don't get me wrong. I mean, the share price is up to 24, so it's not like it hasn't improved. Because this was trading down to what, 11? Is that what it was?
It was down at 11, yeah. Or even 10, 10.42.
So I mean, it's already broken out, once or twice here. But not a ton of shares outstanding. 25 million in float though, so there's still a lot of shares out there in float.
Also, if you go back to the chart, Dane, on 7th of April,
Yeah, what about it?
it doesn't want to go further down. You know what I mean with that.
Yeah, but and also wasn't that when everything was dropping?
Yeah, the market was down also in that day, but also since 7th of April, if you take the bottom there to today, it's like up 31%. So and you can also find some very tight candles there in between before Friday now. So
Yeah.
yeah, I find this a bit interesting, to be honest.
Yeah, I mean, the other thing too is, during that it had broken down, and now it's really riding that 200-day moving average.
Yeah, it is.
What did this do in after hours? Nothing. I mean, I don't think this one is gonna go crazy, but interesting.
Yeah. But if they miss on earnings, you would probably see a decline again.
Earnings, tech, good fundamentals.
Another point, though, and we have said 100 times that we don't necessarily holds a lot of weight to this, but the only insider you can see if you go to open insider is like selling. I would want to see some buying though.
Yeah,
in this area that it has been to.
I think I have some hesitancy in this one. I just don't think. I mean, unless the earnings report really kills it.
Yeah.
The one thing I love about the company though is there's the cash.
Yeah, it looks good. And to be fair, on TradingView at least, they have a history of outperforming the estimates on the earnings.
Yeah, we'll see. I'm not going to put a price range just in yet, but
yeah.
What do you call it? I got to get going here, so I just was thinking we could take a quick look at Nathan's and Sigma, the one that the guys had asked for.
Yeah. That's fine.
If you guys aren't from the States, or at least from like the East Coast, Nathan's it's like a fast food place. They main product's hot dogs, which is a popular thing in the States. not much to say about it. It's a little fast food joint. It's super popular in some areas. There is barely any shares outstanding. 4 million shares.
Been pretty steady too.
Yeah, price is $96. They've been doing really well, it looks like, for kind of forever. Like at least just like very steady. They're very steady. Cash flows pretty solid. But the only thing is this trades at like a premium. I mean, you know what I mean? Like this is.
I saw, according to my data here, my sheet, the insider ownership is above 30%. But on Open Insider, they do sell a little bit of shares every year.
Yeah, I will say, just looking at the chart, to me already it's a little expensive. Now, could it break back out above 100 here? Possibly, but I don't. I wonder how high it will go. I mean, don't get me wrong, it's done really well. And you know, it looks very consistent.
Yeah, I didn't see the chart before now. Yeah, I see what you mean.
But I just wonder how high this will continue to go. Like this one to me is just like a nice, good company. I would want this on like a pullback.
Yeah. Since April 22, it's up 104%. So that's a good steady move upwards.
Like what is this, the 100 day moving average? Don't get me wrong, it is consolidating, it looks like a little bit. So if it can break out past the 100, this could possibly break out. And what was this, the last earnings report in February? That
was the last one, yeah.
So going into an earnings report, if you think it's bullish, it's worth probably taking, but it's just tough to say. But definitely consolidating right here. I mean, volume's really low. I mean, we're talking 4,000 shares on Friday.
Yeah.
Which, I mean, on average, I don't know. It looks like it trades like not even, I mean, like 10,000 shares a day usually, 20,000, between 10 and 20,000. So it doesn't trade all that much anyways, but.
They pay $1 in dividend, which is fine, I guess.
You actually have $2 in mine.
Oh, yeah?
Which, I mean, whatever. I mean, $2. Yeah. I mean, it's like a 2% dividend.
Yeah.
Yeah, like I said, this is a good company. Don't get me wrong. It's just you're paying for that good business right now. The only way I think I would play this is like I said, if everything kind of pulls back, this one would maybe actually you kind of be hoping for a bad earnings report, because maybe one bad earnings report would allow you to kind of get in. Because I bet you a bad earnings report, just at the way it's been growing, is probably usually due to one-off type things, or just like a small slowdown in sales or something like that. But the other thing too is like you'll see periods where it drops down, like trying to purchase around like 100-day moving average. That might be a way to get in on this kind of thing if you're looking to get in up here. Hi. I don't exactly remember who pointed this one out to us, but either way.
That was value.
Was it value?
Yeah.
Gotcha.
There's a Vince Martin article on Seeking Alpha, and he's bringing up a point that the chairman Howard Lorber has recently departed two public companies. Might Nathan's be the third, and he is saying, like I was pointing out earlier, that guy owns roughly 24% of the company and has a long history with an M&A financial engineering. So there are paths to catalyze that value. So that's also a path here, potential.
Gotcha.
Because Vince Martin, we know about him from before, right?
Yeah, I'm
He's
sure.
on my list. Yeah, he's on my list of writers.
I get lost in all these different people, but
Yeah.
but and yeah, so possibly considering selling the business. But I don't. I mean, I wonder how much it would go up from here. And to be honest, if it sells, like you can buy it now in anticipation of the sell, and then you'll capitalize on whatever that difference is. But what does it sell at? I don't know.
Yeah.
I mean, this is a stable. I could see this go private, and someone just kind of just keep accept. Like this is like something Buffett would buy if it got cheap enough. You know what I mean? Like this is the kind of thing where it's just very steady. It's kind of locked into a big chunk of the country, and you know, it's a real low cost business. It's been around for 100 years. You know what I mean?
Yeah, and it went up. That news came. Well, what was it? 8th of February. That news came 13th of February, and together with the earnings report, it jumped up to roughly 105. So it's not too far off that now, you know.
Right.
So yeah, I'm not sure how much I would. I agree with you. A pullback here would be nice, but you might not even get it because of that sale rumor, and which led the stock price to kind of establish itself up here, you know, from the 75 range.
Yeah, like I said, I agree. I would be looking for a pullback.
Yeah.
I mean, because this even, I mean, it trades at a PE of 16.58 is what mine says. So, like, that's pretty fair value, I would say.
Yeah, which probably the market has priced in a potential sale then.
Right.
Yeah.
So, and I mean, earnings per share is 579. So, I mean, earnings per share is, it's, you know, that's what they have on here. I think I had a higher number, but.
Yeah, I have a little bit higher than that, but it's still 581.
Oh, no, I got 580. I got it right about the same. So, whatever.
Yeah.
But, I mean, still, I mean, almost $6 a share.
Yeah.
I like the business. It's pricey for me.
Yeah. We're not going to do it now, but maybe check, if you are interested, check more into this CEO, Howard, and see, look at his history of selling companies and stuff like that.
Yeah, that's probably a good place to go into if you're going to buy it on that route.
Yeah.
All right, and then just quick, lastly, Alpha and Omega Semiconductor Limited. It's a designer, developer, and global supplier of a broad portfolio of power semiconductors. Blah, blah, blah. Includes approximately 2,700 different kinds of products that operates in the United States, Hong Kong, China, and South Korea. So Americas and Asia. These are used in all kinds of things, electronics, basically. Share count's been creeping up. Revenues are decent. No debt.
Margins have taken a little bit of a hit.
Yeah, it's trading at a discount to book.
Yeah,
but
it does. And like you said, it has cash a fair bit too, right?
yeah, it slowed down its capex, which makes me think. I mean, they had a ton of money. It looked like in 2021.
And I have cost and expenses even going up from 23 to 24. Also operating expenses up a little bit.
Yeah, no dividend.
Negative earnings though, and that's also increasing negative since 23.
Yeah, that's definitely the main concern here. Is it seems like there's kind of been just a drag on it overall, and these numbers are all like really out of whack because of the fact that they had this massive year in 2021.
I was going to say, my sheet says like roughly 20% insider ownership, and I see on Whale Wisdom there's a guy called Mike Chang who owns 14% according to Whale Wisdom. I assume that's the founder.
Probably. I will say this is trading. This is trading at value territory. this is much more value territory. This has got all the way down to $15, and this was up at 50 at the end of last year. So
and some heavy sell volume the last week too.
Yeah, I would say the issue is this looks like people are not confident that this thing's ever going to produce cash.
I agree with that, and also if you draw a line on the chart where we are now, Dane, around roughly, what is it, like, let's say 20 then.
Yeah.
Since November 20, it has traded above that price, you know.
Yeah, I see what you're saying.
So everyone, there's a lot of resistance probably if this starts to turn. It needs like some crazy volume and some crazy good outperformance. For a lot of people are at a loss here right now. That's going to be a bit hard for them to you know, hammer their way up again. If you look at this more from like a swing trading perspective.
Yeah, I'll definitely keep an eye on this one. I think I want it to come down. You know, actually, just recently when it got down to like the $16 area, I would definitely be interested around there because, like you said, there's some real support around like $14 or $15. I have a really hard time thinking it would break through there. And down there, the fact that it's got a good balance sheet and stuff, this would be a little more interesting in terms of like, doesn't take much to turn around. You know what I mean? Any good news would be great news.
Yeah, because if this drops below 14, then yeah, I have a hard time seeing that. But if it does, then it's starting to be really interesting from a deep value perspective. But they also have earnings in 10 days. And I see a lot.
It sounds like they've tried to go into AI and it hasn't quite panned out yet. They did Ryzen secures AI server order with NVIDIA. So and that was in February.
Yeah.
Not a lot of comments or anything on these last few articles.
It seems though, straight after I said that it can be hard to get down to 14. If you look at the past week, and I saw also some analysts are maintaining like a sell rating, but look at the selling volume since 10 of April. That looks pretty ugly. And then it has bounced up a little bit, but it's on lower volume than the daily average volume. So yeah, if this turns around, you might get a bigger drop in the price.
Yeah, and just the fact they're slowly diluting shareholders, though.
Yeah.
How much cash are they burning a year? Come on.
Is this on Reddit or something?
Operations. I mean, you know, EBIT's like negative 20. I will say the trailing 12 months have looked better. I'm surprised it's selling off quite so hard when the numbers have gotten a little better. Like, it's not great.
Maybe it's like you said, the failed strategy with AI and all that stuff.
Yeah, it might have just been overzealous, and like you said, a lot of it's pulling back because, like with anything with AI, everyone gets kind of crazy and thinks like this is going to be the next, you know, billion-dollar company, and
yeah.
It might not ever reach that point. But I do think if it gets a little bit cheaper here, I'll keep an eye on this one.
Yeah. Also, a bit of a bigger overview, like the semiconductor space. You know, what are your thoughts on that right now, Dane?
Sorry, with the what part?
The semiconductor space, it's been getting a bit hit lately, right?
Yeah, but at the same time, I mean, maybe due to tariffs and all this back and forth. Where are these guys out of?
I couldn't see. They're from California.
So I don't know. Maybe they, you know, with the tariffs and stuff going on too, it could be that their business is going to take a hit from that. So, we'll have to see.
Yeah.
All right. I think I'm gonna call it there. Yeah. So with the last two, like I said, Nathan's. If you want to get in here and try and capture that bounce between, if it sells, you know, it's one of those companies too that could trickle up just kind of indefinitely almost. So not a bad long term hold. I just think you're buying it at a premium price here, but it is a great business. And then AOSL, they just need like a few good earnings reports because things have really fallen off here.
Yeah.
And I mean, this all gets thrown off by, like I said, the 2021 year, but
Even on their last earnings, which was 5 of February, which was an earnings beat, you know, the share price has just fallen.
yeah, and I mean, if you look at it, you know, even trailing 12 months, like for instance, like EBITDA is 37, EBIT's negative 19 million. That's much more common to back in the 2000 times. And I just want to pull up like a long-term chart here. Which, you know, during that time, it traded in this range. You know what I mean? So this might be already at kind of like a higher valuation if they don't kind of turn it around here.
Yeah.
One last thing. What was the debt levels back then? I mean, they did have debt though back then, which, you know, well, not all those years either. They started to take it on. But they haven't taken on debt, but they've also been diluting shareholders. So
Yeah, they have. And let me see again. Yeah, again, insider are selling, but that guy owns 14% though. Cheng Mike. He's also selling a bit. I would be a bit careful on this last one.
yeah, I think all of them a little bit.
Yeah.
All right. You got anything else to add here?
No, I think it's good. I can add like thanks again to Voxy and Value in the Discord who mentioned some tickers because it's always good. Like Dane and I spoke before the stream, like we miss it a bit to do the deep value style, right? And like we have said before, also during the week we sit down and do this sometimes. We like to keep an eye on things, but when you throw some tickers our way, we are just happy to, you know, to spend some time on the stream going through everything. So really appreciate that. So keep them coming.
Yeah, no, for sure. Because like I said, some of these names, you know, like I've seen them, I hear them, and you know, I just haven't necessarily looked into a bunch of them too. So it's if you're interested in it, I'm sure there's a reason to look at it. You know what I mean? It's all of us are kind of in this for the same reasons. And we you know, I'm busy, so there's times that I just don't have a chance to even like, you know, screen for these kind of things, let alone, you know, find some interesting ones. And you know, like I said, in a perfect world, if I was doing this every day, I'd be really on top of all this stuff. But
it's hard.
It's, you know, I get sporadic times throughout the week that I even get to delve into a lot of this stuff.
but these tickers, a lot of them at least, I can't remember if all of them, but I think maybe all of them had in common that they had control of the debt, right? And they had some cash, which is what you want to see in the period we are in now.
Yeah, and you know, just in terms of my general strategy, I found the same thing. Whether you're looking at trading or you're looking at investments, the one thing I see that's in common, even with deep values usually, even though a lot of them look like shit, the idea is that they're about to turn it around, or something's changing, or it's cyclical, and they're going to be a decent business. You're going to see some kind of return. Yeah, there's M&A and some of that kind of stuff that gets thrown in there too. But in general, there's a reason if it's an M&A target that, it has something in the business that's still worthwhile to someone. So yeah, you're gonna find businesses, whether they're cheap or not, that have cash flows, that have decent revenues, doing the same things we all want to see: buybacks, dividends, and if they're trading at a premium, then I'm looking at it, can this break out? If it's trading, underneath that premium or at some kind of huge discount, then that's where it starts to just take the value side. But the general theme I seem to find is you're looking for businesses that, are underappreciated in some way.
Yeah. And a big catalyst for at least the three we went to in today, or the three last ones. If you get a big insider purchase, remember value with his NATH played. He leaned a lot on those insider purchases, and if they are beaten down like Dana is explaining now, and you get a huge insider purchase, something which was kind of the opposite in these ones. You got a lot of sellings, but even more so then if you get a big insider purchase in this time period now, that's a catalyst as well that you should consider heavily.
Yeah, I was gonna say. I mean, even RK says, his biggest thing was almost insider purchasing. I mean, you have to weigh that pretty heavily. If you want confidence in anything, what better confidence can you get than management taking a huge position in their own company?
Yeah, especially now where things are down and broken down a bit.
Right. So
it would show me that they are not in fear, at least. It should show you they are not in fear of going bankrupt, and they are also expecting to deliver good results moving forward. In which time frame is something you need to figure out on your own, but yeah, that would be a big catalyst for these last ones that we looked at.
Yeah. All right, guys. Well, I hope everyone enjoyed the stream. Thank you once again for tuning in, and Johnny, have a good rest of your week.
Same to you. See ya.
All right. We'll see everybody next weekend.